Hello friends, we'll be discussing another illustration which will be the last illustration where co-ventures record the transactions. Now this illustration will be a little complex whereby you'll be able to, or rather you'll be having to make the payments and the receipts account as well. So let's figure out what do we have in here. Now, when we speak about this last illustration will have details about the kind of receipts account and the payments account along with the joint venture and the co-ventures account that you have to make in this transaction. So let's figure out what the illustration is and then we can jump on to the solutions of it. So the illustration has been mentioned here. Let's read it out. The parties to the venture are A and B. Now, A and B enter into a joint venture where they share profits and loss equally. Now, A purchased goods worth rupees 5,000 on cash. And that happened on 1st of January 2016. On the same day, B bought certain goods for worth rupees 10,000 on credit and spent 1,000 on freight charges, etc. Now, further, there were certain expenses that were incurred by both A and B on certain date. They have been mentioned down there. On 1st of Feb 1200 on 1st of Feb 2016, 1,500 was spent by A. On 1st of Feb 2016, 1,500 was spent by B here. On 12th of March 2016, 500 was spent by A. These are the expenses they have made as per the dates mentioned. Now the sales done by each of them on certain dates have been mentioned down there. On 15th of Jan, A made a sale of 3,000. 13th of Jan, B made certain sale which amounted to 6,000 there. Now in the month of Feb also there were certain sales. 15th of Feb, 3,000 of sale was done by A. And 1st of March, 4,000 of sale was done by B. Now, the creditors for goods were also paid by A and B. Let's look out how they paid them. On 1st of Feb, 5,000 was paid by A, and on 1st of March, 5,000 was paid by B. Now, on 31st of March 2016, the balance of goods was taken over by B at the rate of 9,000. The accounts between the co-ventures were settled in cash. On the same day, that means 31st of March. Co-ventures are entitled to an interest of 12% per annum. That means that is the interest they are supposed to receive. We are supposed to prepare the necessary ledger accounts, assuming that they maintain all the transaction record. That means all the transactions are being recorded by each of them. So let's figure out what are the ledger accounts that we need to prepare here. So in the books of A, we have to mention the joint venture account and the account of B, that is the co-venture account. But before that, let's do certain working on this. Now this working will be related to the payments and the receipts. That means the payments that have been done by both A and B and the receipts that have been done by both A and B, and depending on that the interest has to be calculated. So let's do that first. Now that we have prepared the format here, we have mentioned date, the amount that has been paid, next the month, for how many months it has been paid, and the next is product, that is A into B. Whatever amount and month will be multiplied and that will be utilized for calculation of interest. So let's figure out the first part for A. So now how this function works is from the date of purchase or date of payment or date of receipt until March, that means 31st of March, because that's when the venture gets closed. So until that many days, how many months have been done is what we have to look after. So the first payment that was made by A is procuring of goods. That means 5,000 goods were purchased by A on cash. 5,000 amount has been mentioned. The number of months, that is in Jan it was purchased. So Jan, Feb and March, 3 months total. So the product will be 15,000 here, 5,000 into 3. Secondly, the next payment that he has done is a payment to the creditor on 1st of Feb. Again, that payment has been for 5,000, but it has been done in the month of Feb. That means Feb and March, 2 months is something that he has to calculate for months. So the product here will be 10,000. Now the next transaction that was done on 12th of March, it was for 500. That means in the month of March, that is only 1 month transaction that we'll be considering here. So the product here comes as 500 itself. Now when it comes to interest calculation, you have to calculate the total amount and the total of product. So now when it comes to interest calculation, interest will be calculated both on the receipts and the payments. So everything is done in the month of March itself. That means 1 month interest is supposed to be calculated. So here that will be on the product amount. So let's figure out how to calculate that. So that is total product is 25,500 multiplied by 12% on it, and that will be for 12 months. That means the interest that we'll be getting is for 12 months, and if you divide it by 12, you'll be getting 1 month interest, which comes to 255 rupees. Let's mark it as 1. Now this is the interest that we are supposed to pay him. That means the venture is supposed to pay him for the payments that he has done. On the other hand, he has received certain amount as a part of receipts. On that amount also we have to calculate the interest in the similar manner and see whether we are still liable to pay him or he is liable to pay us. Now in the similar format, we'll be taking the receipts here by A. So on 15th of Jan, he did the first sale for 3,000. Now from 15th of Jan, that means half of the month of Jan and 2 months of the total Feb and March, that is 2.5 months. That brings you a total of 7,500 as product. Now again on 15th of Feb, there was another 3,000 payment that he made as a sale. So from 15th of Feb, half of the month of Feb and 1 month of total March, that means 1.5 months. Let's calculate the total of this. Now on this as well, we have to calculate the interest, again the same formula. So you have figured out the interest for 1 month is 120 rupees on receipts. That means the net interest will be the amount that he's supposed to receive. That means from venture he's supposed to receive an interest of 255. To provide to the venture, he has to give 120 rupees of interest. That means if you have to see, 255 is what venture will give him, out of which 120 is what he's supposed to pay as an interest on the sales amount to the venture. So the difference between them is the net amount due, because venture is on the higher side. The amount that is payable by the venture to co-venturer, or that is A, is on the higher side as compared to the co-venture amount payment to the venture here. That means, to give you a small example, if you are the venture, I am the co-venturer, you are supposed to pay me 255, that is on the higher side. I am only supposed to pay you 120. So the difference is still, that means you are liable to pay me. If it had been vice versa, that means 255 is the interest that I had to pay you and you had to give me only 120, then that would have been a complete set off. I would have given you the additional difference between them. So that's how the formula goes. So the net interest is 135, that is due to A. Similar calculation has to be done for B. Let's do that. So we have mentioned the same thing here, same format: date, amount, month and product. Amount will be A, month will be B, and the product will be A into B. Let's figure out the payments done by B now. Now on 1st of Jan 2016, B made a payment of 1,000 towards freight and charges for the goods that were bought on credit for worth rupees 10,000. So credit transaction aren't taken here. The only transaction that has been taken is the payment that has been made in cash. So 1,000, and now the months will be 3 months because it is until 31st of March that we have to calculate. So the product here will be 3,000. Now on the 1st of Feb, he made certain payment of 1,500 towards expenses. So that gives you total of 2 months because Feb and March. So that is again a product of 3,000 here. Now let's go on to the next payment. Now on 1st of March, he made a payment of 5,000 and that was towards the payment to creditors. So that will give you a total of 1 month credit here, or rather 1 month interest period. So the product comes as 5,000. Now let's total the amount. So the total comes as 11,000. Now let's figure out how much is the interest due to be. So 11,000 into 12% for 12 months. So that means the interest here, that means the interest due to be given to B is 110 rupees. Let's mark it as 1. Now let's figure out the receipts he has done. So again, the receipts, once it has been done, we'll calculate the interest on that and figure out which one is more. Is the interest due or interest received? Now we have to calculate the receipts by B. Now in Jan, or rather in the month of Jan, he made certain transactions, or rather there was a sale receipt of 6,000. So now it has been done on 31st of Jan. So 6,000 will be calculated for Feb and March, 2 months. Now in March 16, that means on 1st of March 2016, 4,000 sale happened and that was done by B. So that means 1 month interest here. So the product there will be 4,000. Let's total it out. So the product total is 16,000. Let's calculate the interest on that. So that comes to 160 rupees of interest. Now if you see here, B has received more interest, or rather the interest that he's supposed to pay on the receipt of amount, that is 160 rupees, and the interest he's supposed to receive from the venture is 110. So now here B has to give the interest to the venture, that is the difference between 160 and 110. So this is due from B. Now that we're done with the calculation, we can easily go on the preparation of joint venture and the co-ventures account in the books of A. So we'll first mention all the expenses done by A and B together. So the first entry that we have passed here is the entry related to the cash account. That means joint venture account debit to cash. This is the goods that has been purchased by A worth rupees 5,000. Hence, as it is in the books of A itself, hence we have mentioned cash. If this was gone via bank directly, then it would have been mentioned to bank account. Now, let's mention the expense, or rather the goods purchased by B here. So that has been also mentioned along with the amount, that is 10,000. The next expense was done by B where freight expenses were paid. So that will be also mentioned here. Now the next will be the expenses done by both A and B will be recorded here. So B made an expense of 1,500, that has been recorded. Now the expense done by A will be recorded as to cash expense. Now once the expenses are recorded, let's record the sales here. Now the sales done by A will be recorded together. So A totally did a sale of 6,000. 3,000 and 3,000 together gives you 6,000. Let's record the sales done by B. B together did a sale of 10,000 here. The next part will be the goods that are taken over by B, as they have mentioned in the question, worth rupees 9,000. Again, this will be B's account debit to joint venture. So in the joint venture credit, it will be by B's account 9,000. Now once this is done, let's mention the interest part. Now when it comes to A, the joint venture is at an expense because 135 rupees is what the joint venture is supposed to pay him. So joint venture account debit to cash account or to bank account, whatever the interest will be, or rather to interest account itself we can mention there. So we've mentioned to profit and loss account, bracket we have mentioned here interest account, and the amount is 135 here. So that has been done. On the other hand, we have to mention the joint venture income. That means B is supposed to pay an amount of rupees 50 to the venture. So that will be the interest part that we have to take into consideration. So the entry will be on the joint venture credit side, will mention by B's account interest amount 50. So now that we're done with the all expenses, cash, sales, transactions, interest, let's calculate the profit or loss. Let's figure out the interim balance of both debit and credit side now. So the debit side total comes as 18,135. Let's figure out what do we have on the credit side here. So the credit side total is 25,050. That means clearly there's a profit here, as credit side is more as compared to the debit side. So let's figure out how much is the profit that is supposed to be shared equally between both A and B. So 25,050 is the total amount. The difference between them is 6915. Now 6915 is the profit which has to be shared equally. So let's divide it by 2. So it comes to rounding off as 3457 and 3458, because if we divide it by 2, that means 3457 divided by 5, or rather 3457.5 is the answer that is coming up. So round it off to one lowest digit and one highest digit and you'll get the same amount, that is 6915. So here the joint venture account is closed. Now let's go ahead and prepare the co-venture account. Here that will be B's account. So when it comes to B's account, all the entry will be reversed here. Whatever transaction is done, all the expenses will be mentioned on the credit side and income will be mentioned accordingly there. So let's mention the first expense done by him. That means goods purchased on credit. So the first entry has been made for 10,000 rupees. The next one will be the freight expenses. So 1,000 freight expenses has been also covered out. Next will be the total expenses incurred by B in terms of cash. So that comes to a total of 1,500. Now let's record the sale transaction. So the entry when sale had happened was B's account debit to joint venture. So on the debit side of B it will be to joint venture. So the total sale done by B was 6,000 plus 4,000, that is 10,000, that has been mentioned down there. Next is the goods that are taken over by B. Again, that is a profit for the venture, hence B's account debit to venture was the entry. So on the debit side of B, we'll be mentioning the goods taken over by B itself. The next will be the creditors that were paid by B. Again, the creditors are being paid by B. That means B's account has been debited and the joint venture account has been credited. So, or rather when we can talk about B's account debit to bank account. So, B's account on the debit side, it will be to bank creditors paid 5,000. And the next part will be the expense or rather the interest that is due by B to be paid to joint venture. So again, the B's account debit to joint venture account is the entry. So on the debit side of B, it will be to joint venture account, interest paid 50 rupees. Now on the credit side, we'll be moving his profit because the profit entry here was B's account debit or rather it was joint venture account debit to B's account, or so in this case on the B's account credit side we'll be mentioning by joint venture account profit and loss. So that is the entry that we're supposed to pass. Now let's figure out the balancing figure here that is supposed to be paid by the bank. So the debit side total comes as 24050 and I'm pretty sure that is more as compared to the credit side because you can clearly see the numbers there. So the balance between the credit side and debit side will be the balancing figure, that is by bank. So that gives you a total of 8090 as a balance figure. That means this is the balancing figure that we are looking out for. So this is how you solve the problem which is related to, rather when it comes to joint ventures or co-ventures, or rather when co-ventures record all the transaction, this is how you make the transaction receipt. I hope the clarification regarding the calculation of interest was easy enough to understand. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.